In this video, guys, let's look at signs the market may be about to break out the next day. So good for swing traders, also good for you day traders who perhaps want to position for a volatility expansion on the day after. Let's look at some of the clues. Stay tuned. Hey guys, warm welcome to you. Alright, so before we continue, let's go to the description below. Check out our channel sponsor. That's Core Spreads Australia. A decent platform, decent tight spreads, a good simple execution venue. If you haven't checked them out yet, there's links in the description below. Okay, so let's have a look at some of the things and clues that we might see as a precursor for a potential breakout in the market. So imagine this scenario. We're chugging along, the market's been up. Now we are just sort of sitting here and we want to position for a breakout move the next day. And so we want to come into the next day either positioning as a swing trader for a multi-day move, or as a day trader, at least not trading mean reversion, looking for volatility expansion, momentum ignition, that type of trade. And so when we come into that day, do we have some clues from the prior day that give us more weight into taking these volatility expansion breakout type trades? Yes, we do, and here's some of them now. And if you've got any more, then please feel free to add them to the comment section below, so we can kind of expand on this and work out really where the sweet spot is where we really want to get involved with these breakout type trades. Okay, so the first thing is a narrow range after a range expansion. So if we've already had a range expansion, so market's been here, the market then kind of chugs on for multiple days, maybe multiple weeks, whatever it is, then it starts to have a narrow day or several days. So in other words, it kind of sits there and does nothing. So imagine, let's say that we had this candle here, let's say we had this kind of candle here, two solid green candles, and then we kind of get this narrow day, maybe 1 or 2 days, then really you should be looking the next day for expansion. Now I know I said 1 or 2 days, of course, we can't guarantee this is going to happen, but let's say we had day 1. The next day we might be looking for some signs. If it's a really strong move, 1 day of narrow range might be all that it gives. If we have a couple of days, I'm definitely going to be looking for perhaps day 3. If you have 3, 4, 5 days, then maybe things have just run out of steam and buyers are tired in this example, so I might not be looking for it. So if we have this narrow range after the range expansion, it's really like bulls charging, taking a breath, taking a breather, and then they're back on the throttle again. So that's what we're kind of looking for. The other one is the inside day. So similar type of thing, narrow range. Narrow range doesn't always mean inside day, but inside day is when we have the trading high and low falls within the prior day's high or low. So if we get that same kind of scenario as the narrow range day. So number 3, the market closes near to the open. Again, a sign of indecision. So even if we do potentially break out of a high, maybe suck a few buyers in, maybe catch them out a little bit, even if we don't necessarily do the inside day or the narrow range, the fact that the market's opening here, pushing up, pushing down, doing a bit of business, but really ending exactly where it was, indecision type day, almost a doji type day will look like a pretty decent doji, on your candlestick chart, your daily candlestick chart. Again, it's a feeling of indecision, the feeling that everyone's just waiting, just priming, ready to potentially explode. So if we've had that the prior day, the next day, maybe we're going to be more comfortable taking the breakout. Maybe we're going to be more comfortable aligning ourselves with some momentum after we've had that initial day. We've got to be careful we're not chasing stuff when we've had a really big range day, which is why we kind of want some clues that the breather's finished and now we're back on the throttle. Now we're going to accelerate again back in the direction of the initial trend. Number 4, the volume declines after the high volume. So classic kind of volume analysis here. Good volume on the drive, the initial drive. Now we want to see some calmness. So a quiet day, not a lot going on, very, very slow trade, not much volume being transacted, whether you're trading, whatever market you're trading. Just again, the sign of a breather, really ready to explode again the next day or potentially the day after that. So volume's a good indicator and clue for that. Number 5, impending catalyst. So this is really if we have let's say, for example, we have a Fed announcement or non-farm payrolls or something, ECB or something that's relevant to the market you're trading about to come out. Now, it might be obvious, but very often the day before, a couple of days before, especially if it's an announcement everyone's looking for, it might be very quiet, very calm. And then after the announcements come out, regardless whether the announcement is a surprise or not, by the way. So of course we have a surprise, let's say rate cut, and we're going to get a big move, or a rate raise, we're going to get a big move, or jobless claims are way out of what it expected, we'll get a big move. But regardless of that, forget about that for the moment. That's a separate setup. Even just having the data out of the way can then mean that people can get back on the gas again. People can start the buying again in the case of the uptrend. So we have the good move, we have the pause, we wait for the data comes out. Everyone's like, right, data's come out, there's no big surprises, let's go. We've got some more orders to fill, got some work to be done. And so you get that then continuation. So look for that kind of thing, the impending catalyst. And also same for stocks, guys, for your earnings as well. Number 6, holding at or near extremes. So we talked about the open and close being similar, but even if you're holding near extremes in the order of magnitude of the move, so let's say we've got a couple of day move there, holding near to extremes, we're probably going to look for a move to the upside as a continuation. That's the momentum we want to follow, and that's the breakout we'd be looking for. We wouldn't be looking for a breakout to the downside. If anything, we're looking to work bids under those lows for a fake out and then a subsequent break. And if it does it does kind of fall reverse, then we've obviously got a stop loss in place to manage the risk with that. So holding at or near highs of the prior kind of 4 or 5 day move. So this is some ideas, guys, that the market may be about to break out. Good signs for the prior day that we can take to the next day to kind of give us a little bit more weighting, a little bit more certainty. We never be certain, of course, but a little bit more authority that, hey, you know what, things might actually happen here. We might get moving. Don't forget to check out our channel sponsor, guys, Core Spreads Australia. Link to them in the description below. Take care, keep risk managed. I'll see you next one. Bye-bye.